The JSE All Share Index bobbed around the 120,000 points level for much of the day, driven mainly by the resources and industrial counters. And this is a continuation of a good run since much of last year.
Still largely the same drivers this year as well in terms of what we've seen over the past few days. So PGM count is actually now beginning to take front and center, but gold count is as well still benefiting from the elevated commodity prices for both of those. I mean, we've seen PGM prices rising by quite a bit. And what this means is that we might, be in for another year where these counters do continue to benefit from that environment as earnings, follow and benefit quite greatly from the commodity cycle. But over and above that, we also do think that there is scope for, a broader market rally, particularly financials and industrials also doing well this year as well.
Letlo Jane explained why it is that while South Africa's economic fundamentals still need a lot of improvement, the rand continues to firm against the US dollar, which is a positive factor in helping to keep domestic inflation in check and improve local purchasing power.
The rand is quite driven by a lot of global factors as well, and I think we're benefiting from those. So in an environment where we're seeing interest rates being lowered in the US, that certainly tends to bode well for us. And then also just in terms of, that interest rate differential that we have with the US as well, that beginning to narrow, or that also begins to bode well for the rand overall. And some of the drivers of that is the fact that we have lowered our inflation target. So in real terms, in terms of our purchasing power, depreciation over time, that is expected to be a bit lower relative to developed markets. So that tends to benefit the rand as well and capital flows.
Meanwhile, Little Jane welcomed the EU's decision to remove South Africa, along with a number of other African countries, including Nigeria, off the high-risk financial transactions register, which is akin to the Financial Action Task Force grey list, which encourages countries to improve their anti-money laundering and counter-terrorism financing systems. However, he believes that the benefits derived from the removal from the FATF grey list in October last year have already been quite significant.
I think these two regulations are almost linked. So effectively, when we got removed from the grey list, it meant that automatically we get removed from the lists from particularly the EU as well. And now that we have been reinstated into the, where we are in a much better position from a grey list perspective, then you have that automatic spillover as well. So I think already the benefits from just removal from the grey list have been positive, and we do then anticipate that even from an EU perspective, it's just an additional easing of the red tape, particularly in terms of financial transactions between our financial institutions and financial institutions in Europe. But I think in large part, the fact that we got removed from the grey list is really the key catalyst here.
South Africa's removal from the FATF grey list is one of the many reasons cited for an improvement in the country's capital markets, like bonds and equities. And this decision, and now that of the European Union, should help South African businesses do business outside of the country more efficiently, with payments and transactions for goods and services executed with minimal hassle. Nampumelo Siziba, SABC News, Johannesburg.